Harvey with Fairway Mortgage in Henderson, Nevada will be joining us to go over the ADP report that was released on Wednesday and the BLS report that just came out this morning. Let's get to it and let's get her up. Hey, good morning, Celeste. Thank you for joining in.
Good morning, Andrew. Thank you for having me today.
Well, super excited that you're here. So shall we go after leading in right away with the mortgage rate updates for today before we start diving deep?
Yes, let's go ahead and start off with the mortgage rates for today. So here's what's going on in the market. You know, there's some big news that came out this week regarding unemployment rates and the number of job losses for the month of April. And typically when we see large numbers like this, we would expect bonds to just be flying and the rates to be dropping. But today we're actually kind of just seeing the bonds just remaining flat. In fact, stocks were up just slightly this morning after receiving this news. So what I think this means is that we are living in strange times, and what we would normally expect to happen isn't typically happening right now. But what I have seen, over the month of April is the Fed doing a really good job of keeping the mortgage market stable, and the interest rates have been remaining low and fairly steady. So if you can pop up that chart that I have with the candlesticks, that will be a great visual for our audience here.
Are you referring to the BLS report that came out this morning?
No, it is a chart with candlesticks.
Got it.
The UMBS 30-year. Yes. So on this chart, we can see, in the month of March, there was a lot of volatility. You can see those candlesticks. Large red candlesticks, large green candlesticks. And then towards the month of April, we can kind of see bonds trading sideways. And this is really because the Fed, slowly purchase, every day they're purchasing mortgage-backed securities, and they're purchasing them at a steady level. Early April, they were purchasing about $20 billion per day. And then towards the middle of April, they were purchasing about $13 billion in mortgage-backed securities per day. And now heading into March, we're seeing them purchase around $6 to $5 billion in mortgage-backed securities per day. So to me, it seems like the Fed is slowly taking off the training wheels while remaining the stability of the mortgage market.
Okay, cool. So right now you're going to be seeing you're saying that rates are going to hold kind of steady. There might be a slight dip, but how much of a dip is anyone's guess, because the Fed is actually a bit more confident in what's happening. Hence what you're calling is taking the training wheels off a bit by reducing the amount of purchases of the mortgage-backed securities. Is that an accurate summary, my dear?
Yeah, I would say that's somewhat of an accurate summary. It's really, we're going to see what happens, and it really depends on what the Fed does. But okay. I think their best interest is to maintain the stability of the mortgage market, which therein maintains the stability of the mortgage rates. And right now we're seeing interest rates in the low threes. Okay. Really just depending on what particular loan program you're going with and what your particular situation is like as far as credit and loan to value.
Okay, great. So I really appreciate that. So those are a lot of updates, and I know that we are well prepared for giving out a lot of great information, especially with the ADP Jobs Report that came out on Wednesday, the BLS report that came out this morning. Why don't we start with your observations of the ADP Jobs Report, and let's go from there.
Yes, so this report came out on Wednesday, and the ADP reported that about 20.2 million people had lost their jobs in the month of April. And Andrew, if you can actually bring up that infograph from the ADP, perfect. Yeah, so about 20.2 million people were reported to have lost their jobs in the month of April. Now, this does not include government employees or self-employed individuals. So those individuals are not counted in this data. And if we break down this number, if we dive a little bit further, you'll see that of the 20 million, and we break it down by business size, small, mid-size, or large, small businesses lost about 6 million jobs, mid-sized businesses lost about 5 million jobs, and large businesses lost about almost 9 million jobs. And then if we go a step further and we break it down by sector and industry, we'll see that the goods producing sector lost about 4 million jobs, while the service producing sector lost, closer to 16 million jobs. So the service producing sector was hit a little bit harder than the goods producing sector. So, I'd like to go into the BLS Jobs Report now.
That just came out this morning, so thank you so much for doing that, because I know that was something that you were up bright and early and getting your nerd on to get over there so that we can get this information and quickly send over this chart that you were able to have access to. So yeah, let's go ahead and get into what you learned this morning on the BLS report, please.
Yes, I love to nerd out. So I was up bright and early researching as much as I could regarding the BLS Jobs Report. And, the BLS Jobs Report is headlining about 20.5 million job losses. And it's important to note that the BLS obtains their information from two sources. We're looking at the payroll survey, and they're also looking at the household survey. The 20.5 million job losses, this number comes from the payroll survey, which is kind of just looking at numbers for employment, other data like hourly wages and stuff like that, while the household survey is a better indicator of the actual unemployment rate. And the household survey actually reported about 22.4 million job losses with an unemployment rate of about 14.7%. Now, I want to point one thing out. This information was collected the week of April 12th, leading up to April 18th. So there is a little bit of a lag with this information. Just in the last 2 weeks from the weekly jobless claims report, we found that there's another 6 million people that actually filed for unemployment for the first time. So if we kind of add these numbers together, experts really predict the unemployment rate to be more around 18 to 19%.
Yeah, it's pretty high right now, and that's tragic. And that's things that we've been discussing, how it impacts the U.S. economy specifically, and what we're trying to do with provide as much transparency and value to people as possible, is get the truth out there regarding the housing market and also the mortgage world. I know that with the job losses, and it doesn't sound positive right now, and I know that you had a take on everything that you wanted to share with us about what your thoughts are, where this is going, and how to put it in context. Could you give us some of your insights on that, please?
Yeah, so, the media likes to report doom and gloom and, the sky is falling, the world is ending, but I actually see a brighter light at the end of the tunnel here. The reason for all of these job losses are unfortunately due to the pandemic and many states having to shut down businesses to reduce the spread of the virus and to allow healthcare workers to kind of get ahead of this virus. So, now as we're starting to see a lot of states enter into phases of reopening businesses, I think we should see a lot of these people start to get back to work. And the BLS today had some really important numbers. They kind of distinguished the number of people with permanent job loss and the number of people with temporary job loss. So right now they're reporting about 2 million people with permanent job loss, but 18.1 million people with temporary job loss. So a lot of these people, a lot of these 18.1 million people who are unemployed, a large majority of those people should be getting back to work once businesses start to slowly reopen. And I really think the rate at which businesses reopen and what capacity they can reopen while maintaining social distancing practices will be a good indicator of how quickly we kind of bounce back and we get to pre-crisis unemployment rate levels.
I think that's a really interesting observation, and I really appreciate you getting your nerd on this morning and making sure that we got out all this kind of information, because it's exceptionally valuable to know, and it's something that I've been mentioning a lot, and it's one of the things that, Bill, of course, that Bill and I have been trying to figure out, and we were waiting on these job reports to figure out. And what it is that I've been so curious about is with the huge spike of unemployment claims and all the people temporarily out of work or permanently out of work, right, was exactly what is that constitution look like for the unemployment rate. In other words, how many were permanent compared to temporary? And it sounds like this morning in the BLS report, they provided you guys with a lot of information to make that determination based upon what they're watching. And I mean, again, 20 million, over 21 million people unemployed, right? Kind of in that bracket right there. That's awful. It really is. But when you hear the news and you hear that number and you hear the fear porn is what I call it. I mean, you're saying doom and gloom, and we can roll with that, but fear porn, right? I mean, we're putting out porn of fearful kinds, and it's awful. And I'm just going to keep beating it and beating it and beating it until people understand, hey, this is an awful thing to do. Because it really is. Because you hear it, oh my God, there's 20 million people out of work, and the sky's falling, it's Chicken Little time and everything else. But remember that every coin has three sides. You have the one side that says the world is falling apart. You have the other side of the coin that says, oh my God, everything's just hunky-dory, it's never been better. But the third side, in the middle of the coin, the smallest side that is often overlooked, resides the truth. And that's what this report provides. And that's what you're sharing with us today. And that's how much I realistically just appreciate the knowledge and the information you're sharing. Because when we hear of those 20 million, it's salacious, it's scary, it makes people panic. But now when we take a breath, hashtag JTAB, right? Hashtag JTAB, just take a breath. And now we can move before, hashtag beyond fear, beyond the false evidence appearing real, and these, oh my God, 20 million people are unemployed, into the facts of the situation now with facts. That 18.1 million are expected to be temporary job losses, which means that when the states reopen, when their businesses are able to reopen with prudent social distancing practices and compliance with the CDC, then you're going to see probably a V-curve recovery in a lot of different industries. It won't be true of all industries, but it'll also be true of several industries too. So, I mean, I think that's really, really powerful. And I think that we really need to take full context of what that means to people, because in 3 months right now, we could be looking back, 6 months from now, we could be looking back at this like a very bad nightmare, right? Mm-hmm. Because people have their jobs back. So, I mean, that I think is very, very powerful. And I certainly appreciate you sharing that. So what else you got for us, Ms. Celeste?
Do you actually have that graph that I sent over from Keeping Current Matters? I really like that graph because it really shows the comparison between the Great Depression, the Great Recession, and what we're currently going through. And I know people love to compare what's going on right now to, those 2 points in U.S. history. So really, this chart shows the length of time it took for the unemployment rate to return to pre-crisis levels. And you'll see that the Great Depression, it took about 12 years for the unemployment rate to return to pre-crisis levels. Mm-hmm. And in the Great Recession, or what I like to call the financial crisis, it took about 9 years mm-hmm. to get back to those pre-crisis levels of unemployment. But here you'll see Goldman Sachs and JP Morgan are kind of predicting that, it's going to be more depth. So, right now it's going to be a little bit painful with those, 20.2 million people currently unemployed. But with businesses reopening, you'll see that, we're going to see a sharp increase of that unemployment rate kind of diminishing.
Mhm.
And it'll take a lot less longer to get back to those pre-crisis level unemployment rates, which before the coronavirus pandemic, we were at a 3.5% unemployment rate. And now we're somewhere around 14.7. And some people are predicting we're really around, 19%. So for us to get back to 3.5% in 1 to 2 years is significantly less amount of time compared to the Great Recession or the Great Depression.
Yes, it is. And just off the numbers that you gave us a moment ago, saying that from this morning's BLS job report that they're estimating of the 20.2 million presently unemployed, that you have 18.1 million that are temporary job losses. So when we take into context what you just shared with us on these reports coming out, most specifically the comparison between the Great Recession, Great Depression, and what Goldman Sachs and JP Morgan are projecting is most likely to happen here. I think it's really important to note when you're talking about percentages, pre-coronavirus unemployment rate was historically low, or one of the lowest points in our history at roughly 3.5%, right? But when we look at the numbers that you gave us, so if we say 20.2 million, 2 million of those are considered to be, unfortunately, permanent job losses, right? Then that means that just over 90% are considered to be temporary job losses. So why we see a high unemployment rate now? You'll see an unemployment rate hover underneath that 10% mark, taking into consideration that 3.5 was our pre-corona, means that it's an adjusted net factor of about 6.5 to 7 basis points if you look at the true economic damage here. Now, those people, those 7%, I mean, you talk about 7% of what is it? It's estimated, 160 million American workers in the workforce?
I would say that sounds about right.
So obviously, when we start talking about 7% of that figure, that's millions of people, and it's awful. But at the same time, they can have the opportunity to hopefully retool, reskill, and be able to pursue employment and start getting their jobs back as well. Since it's a permanent job loss, if they know now, or if they believe that their job security is in jeopardy, what would be a prudent thing for us to do now? To start searching for gainful employment where we'll have more job security. If we know that up front, we can establish that game plan moving forward, and we can approach everything and say, hey, this crap sucks. I mean, it really does, right? This crap sucks. This is what it is. And we need to pivot, adjust, and move forward and continue aspiring to reach that next level. Right now, reaching the level of stable employment. Would that be, would you agree with the statement?
I 100% agree, Andrew. And I really think the amount of time it takes for us to get back to normal essentially is really going to be what happens with businesses reopening and what happens with the virus. I do know that, they are working on a vaccine right now. They are making strides with the testing of the vaccine. So that could be a potential game changer. If a vaccine comes onto the market a lot sooner than we expect, I think we'll see a lot of the restrictions loosen up regarding social distancing and regarding other types of businesses being able to open. I know here in Nevada, I can't speak for other states, but here in Nevada, we just left phase 0. We were in phase 0 for a while. And yesterday they announced we're finally moving forward to phase 1, actually tomorrow on May 9th. Which is actually a few days earlier than we expected to move to phase 1. So I think that's a really positive indicator of where we're headed. Now, a lot of these businesses have pretty strict social distancing requirements. A lot of them can only operate at 50% capacity. Restaurants, the tables have to be 6 feet apart, but they're still able to reopen. And if we get a vaccine that comes on the market a lot faster than expected, we could probably see a lot of these social distancing practices reduced and more people back to work and back to our normal standards of living.
And I think those are great observations. And if we come together, it's I think that coronavirus has really been an opportunity, frankly, for people to take and reevaluate what's most important to them in life. And it's common that we as Americans will come together in times of need to help each other, but it's not so common that we will always stay together. So my hope out of this coronavirus pandemic is that not only the United States, but everybody in the world realizes that we're all more alike than we are not. And to build a solid foundation of acceptance and understanding based upon the similarities, as we build a strong bridge over the differences called understanding. So when we can do that, then we can come together not only in times of need, but also come together and stay together thereafter, so that we can always be stronger and better together than we are not, because that's a very true statement. And if we focus on bringing love, joy, and hope to each other, not only in times of need, but even when things are really good, I think we'll find a lot more positivity out there. The reason that fear porn sells is because people bite off on it. The reason that it sells is actually goes into, like, I'm not a neurologist, I'm not a psychologist or anything else, but there are a lot of books that I read and study, as you know, and it goes to our actual reptilian brain, where fear is a primal instinct from the days that we lived in caves and blah, blah, blah. Dinosaurs eat us, you see something, you fear it, and it sends an immediate shock of adrenaline through your body. So it's almost like people get high on the fear porn, as opposed to saying, hey, all of us really want love. All of us really want respect and understanding and to be treated with compassion. But why does fear always seem to win? It's in our mind of what we choose to believe and what we choose to do and how we choose to come together. Those are my thoughts on the matter. And it's something that I continually, every single day, I have a whole host of affirmations, as I'm sure you do. But one of them leading in is always, I'm here to bring as much love, joy, and hope to people as possible. I'm here to help people however I can, and to meet them where they are, to try to help inspire them, to get them to where they would like to be next.
Yeah, I agree, Andrew. Fear triggers our fight or flight response. And when that happens, we kind of think irrationally, emotionally, and one thing leads to the next. And, we're browsing the internet and we're looking at all these articles from the media and thinking, oh my gosh, the sky is falling. When in reality, I really wish the media would kind of look at the data and present things in that light. But you're absolutely right. United we stand, divided we fall. And if we all have each other's backs and we're out there providing great, solid information, I think that is what people really need right now.
And it's not only what we really need right now, but it's something that we always need, is transparency and honesty and just balancing everything all together. And that's where, it's so important to talk about this, and why I believe in doing it so much is to keep on fighting the good fight and hoping that other people will help join me as our tribe on my channel, over 19,000. Thank you everyone that is subscribed, by the way, and continue to helping us grow, because it's about increasing our tribe. It's about increasing the impact. And I can't do it alone. I have to have people like you and Bill and the other top agents that have been on with me and everybody that's in our community and our tribe to help move it forward. Because in the words of my friend Sean Connell, your vibe attracts your tribe. So if we have a good vibe, we have a good tribe. And if we come together, stay together, and help encouraging each other and moving forward and sharing this kind of information, I think that's when you start seeing a disappearance of fear porn. And the reason that people do it is, and I've said it several times, and it's a very unfortunate truth in my opinion, Celeste, is, if I was like super attractive or something, like God's gift to mankind or whatever, right? I'd probably get a lot of clicks. But if I was preying on people's fear, I'd probably get even more. But it doesn't sit well with me as a former Marine and a country boy with integrity to lie or to be clickbaity. It sits well with me to be honest. And at the end of the day, whether, I have a bazillion subscribers or none, if what I have to share with people is of value to them, then I've done something right, the way I look at it. Because at the end of the day, all of us get the opportunity, and all of us are going to do it. We're going to lay our head down on our pillow, and either you can do so with a clear conscience or a dirty one. The choice is yours with the decisions that you choose to make every day. And I choose to do the best that I can to continue growing myself. Now, that said, I know there were some comments coming in, Miss Celeste, and I hope there's a lot more comments coming in because this is really a really interesting topic. And I know that some people are like, hey, that sounds dry. I'm not interested, right? But again, back to, I guess, not enough fear point. But I'm not knowing that people just.
Yeah, it's not the most interesting information, but it's important, to take note and to know what's going on, because these numbers are concerning, and it's good to kind of talk about it.
And you're absolutely right. And what's interesting about that is when you have to get your nerd on, you actually have to apply your intelligence. You actually have to learn something. You have to listen to something, and you have to start making decisions. Some people just check out. But at the end of the day, those that check in, those are the ones that are going to win because they have the truth. And when you're talking about people always wanting to like instant gratification, they want that next adrenaline hit. They want that next dopamine hit, or so to speak, right? They want all that, right? So then they bounce and jump and jump and jump and jump. But meanwhile, they never learned anything because they didn't stay and they just didn't take a breath. And because of that, people make what are called hasty generalizations. And with those hasty generalizations, people form their own form of propaganda and propagate misinformation. And that's the problem that we see happening again and again and again. And, I'm trying with great allies like yourself to get around.
We've seen a lot of misinformation out there, all kinds of conspiracy theories and just misinformation about the mortgage market, about interest rates. March was a really crazy month for mortgages. But yeah, I 100% believe that if people took the time to really educate themselves, they wouldn't fall for a lot of this misinformation that's out there, or they wouldn't be spreading a lot of this misinformation either.
You're absolutely right. So Carmina Calva, thank you so much for joining in. I saw that you joined in actually before the stream began and made a very wonderful comment. That I love emojis. And when you give me a smiley face, remember that smiles are contagious. And that's one way of being positive and sharing it with the world is if you make someone smile, there's your dopamine hit, there's your endorphins, there's your serotonin. In other words, the feel-good chemicals in our bodies, right? And then a sun sign. And I'm in Vegas, so yes, it is sunny out. It looks gorgeous, like it's going to be a beautiful day. April, thank you so much for joining in. She says, good morning. Happy Friday. Hope you're well. You too, my friend. And I appreciate your support and checking out the Hernandez family's most recent episode 4 video about learning how to make an offer on a house. Really, really appreciate your comments. And also thank you for hitting me up and friending me on Facebook, April. Really appreciate it. Claudia, thank you for being here, my friend. Elena, thank you. And happy Friday to you as well. Whoop, whoop, whoop. What do we normally call this, Celeste? What were we calling this last year? Margarita Friday?
Oh, yeah. Margarita Friday.
To everybody that doesn't know, Celeste likes her margaritas on a Friday.
I do. And I'm pretty bummed that all the Mexican restaurants are closed right now. But you know what? They open up tomorrow. I'm so excited.
I'm excited for you, too, because you told me that you and your significant other have been hitting up, you love Mexican food so much, you've been hitting up Taco Bell. So.
Yeah, Taco Bell's not real Mexican food, but it's one of my favorites. I'm from San Diego, so, my standard of Mexican food is pretty high, but Taco Bell just hits the spot every time. I don't know what it is about it. I love it.
Okay. To each their own. I'm glad you do. But no, I feel you. There's some good food over there. So Adrian says, good afternoon for us on the East Coast. Adrian, thank you so much. And I recognize the spelling of your name, Adrian, and just want to say thank you for one of your more recent comments on the channel. It was very, very much appreciated. And I appreciate you and your support. And I hope that you and everyone on the East Coast are enjoying a wonderful and beautiful afternoon. Tiger Texan Roughneck Superfan. Hey, Tiger. Let's just go back to Tiger. Tiger says, hey, update on the house situation of the 65% complete house. We have a contract on it. Congratulations, Tiger. That's super exciting. Celeste, Tiger's been joining in the live streams over the past 2-3 weeks, and he's been sharing a situation with us about purchasing a home that's 65% complete with the option to still go back in and start customizing some different things with the property. So Tiger, thank you for checking back with us and letting us know you got a contract. Super pumped up for you, my friend. That is amazing. So Lindora, thank you for joining us again. Really, really appreciate you. And the guest is Celeste Harvey. By the way, if anybody is in Vegas or just around the country, would like to get to know Celeste a little bit better, or would like to apply for a home loan, you can do so at her website here. The link is in the description below to make it easy. But you'll know you're in the right place when you see her smile and her information there. Additionally, you can see a lot of these smiles and just how much Twitchell the cat gets in her way sometimes.
Yes, that's my little baby. I'm a cat lady.
You're a cat
I have a
lady,
dog
but
too.
I was gonna say you just got a puppy recently, so we also know you're a dog lady. But she's also on Instagram as Celeste Nicole with 2 eyes. And the links are in the show more description if you'd like to follow Miss Celeste. You notice there's a considerable amount of people that follow her on Instagram right now, and also on Facebook. So we want to put out her information. Oh, geez, there we are. That was today's thumbnail.
Andrew's over here making me famous. Oh, if you scroll down one more, there's a post about tacos.
Right here.
Yeah.
May the 4th be with you, and may the 5th be with tacos. Well, it probably was, right? So
it was indeed, and tequila.
And tequila, good stuff. So AJF1, good morning. In regards to house hacking with multi-unit properties, is now a terrible time to pursue this due to unemployment or anything else? AJF1, thank you for joining in, and certainly appreciate the question. In short, if you can qualify for a multifamily property, and I know from our conversation, so anytime I recognize his screen name, I know exactly who he is now because he's hit me up on Facebook Messenger and giving me some great suggestions for future guests. By the way, on that note, AJF1, I did talk to Jennifer Beeston this past week, and Jennifer will be on in the coming future. She said she'll let me know whenever she's ready to do it, but she did have an idea for a really interesting hot topic, and Jennifer did say that she would join us in the future. So I do want to give you that update on that. To your point and to your question, if you can qualify for a multi-unit property, and the reason I was saying that, Celeste, is he's a veteran, so he'd probably more than likely be able to use his VA home loan to purchase a multifamily property. I don't think that it's a bad idea to house hack in that method. It just depends on how many multi-unit properties that are truly available where you're going to purchase. I know in your case, you say Portland, Oregon, but I know you're not there now. So I know that's where you would like to be. So get savvy on what those multi-unit properties look like, those fourplex, triplex, duplex, whatever it is that you're considering in that location. Certain areas of the country will have more opportunity for those than not. And here in Las Vegas, Nevada, we don't have a whole lot of them. And when they do come on the market, sometimes right now especially, they're pretty expensive. So you got to balance how much you could realistically get for the going rent. Also balance with what the future projections for potential home gain are in terms of home equity on those properties. And also, if you're going to house hack, then we would like to see you cover all, if not some, and even better if you're making a little bit more money by renting out 3 of the units. Now with the VA loan, since it is primary owner occ, you got to be living in one of those units. So just keep that in mind, that it's a great opportunity for you. And I have another gentleman here in Vegas that we've been discussing doing that with as well. So right now, we're just trying to find the right multifamily property for him. Celeste, do you have any thoughts about his comment being a terrible time, potentially due to unemployment or anything else? Because my thought says, AJF1, if you go back on what Celeste was hooking us up from the ADP and the Bls job reports that came out, along with the balance of how many are considered to be permanent versus temporary layoffs, at the end of the day, we as people need 3 things. We need shelter, food, water. So
I think right now is a great time to purchase a multi-unit dwelling, but it really comes down to, can you currently afford the entire mortgage payment for this property? I think because we are going through strange times now more than ever, I think, it's a good idea to be able to cover the entire mortgage without having to receive rent from a renter. Even with people getting back to work, I think, there could be a little bit more of a risk for people maybe not paying their rent on time or being able to make the full amount of rent. Now, as things get back to normal and businesses start to open, this risk is going to be less and less. But I think that is something you should consider. But overall, it's a great time to purchase. Interest rates are at historical lows, so the cost of financing a property is a lot less right now.
That's true. And given the consideration that he does not yet own one, to my knowledge, then the closing process itself is going to be 30, 35 days. I believe it's pretty much the same there in Portland for the closing process being approximately the same time frame. And the reason I bring that up is if you got a pre-approval, you went out there, bought a property, people start returning the work. Again, people have to have shelter, food, and water. And the reason I bring it up because I like what Celeste just said for a balance point of if you already own one, it could be a little bit tricky because are your tenants' jobs secure? But now that you're into the house hack phase, then you would be the landlord and you would be able to verify said information about job security prior to renting the unit. So you have the flip side. If you're a current owner of a multifamily property, it's something to be wise to. As a prospective owner of a multifamily property, you make sure that you're validating their job security and their employment situation. And then it's a common practice of a lot of landlords that run people's credit and make sure that the credit score that they have is reasonable to your expectations of risk, because a higher credit score means obviously they pay their bills more often than not. So let's make sure that we set you up for success with that. Those are a couple of thoughts I had there. Micah, thank you for joining in. Micah says, I'm 45 days away from an estimated closing on new construction, but I heard I should wait until 30 days before closing to lock a rate. Since I don't know if it'll really be done on time, how do I know when to lock?
So typically with new construction, you want to lock towards the end of the property being finished, completely built. Because if you lock too early, you can run into a situation where you might need to extend the lock, and that costs money. So, if you lock too early, it can cost you some extra money. So I would say that's right in line. You probably want to lock, about 30 to 15 days, when the home is built, when you're expecting that. Now you want to look out for delays that can happen in the process, especially with everything that's going on with the pandemic. There might be, delays in your area. So I would definitely get with your loan officer, whoever you're working with, and kind of come up with a game plan for locking in your interest rate.
And those are great points from the mortgage perspective. So let me give you a little bit of real estate perspective, Mike, on this as well. You want to get with your trusted real estate advisor that you're working with us, hopefully that you have for your own independent buyer representative. And what you want to do is you want to get with them and have them get with the builder to find out where they are in the build phase. As a pro tip here, and this is a big one, when you start trying to time a closing on new construction, find out when the cabinets are going to be installed. From the time that cabinets are installed in new construction, you're approximately 30 days away from close. It is one of the most significant things in the new construction process, short of pouring the foundation. When those cabinets go in, you're normally 30 days away from closing. So if you're wondering about tying it up with what Celeste shared with you about 30, 45 days and rate locking, and obviously making sure you don't lock too soon, then time out when those cabinets are going to get installed, Micah. And then from that date, verify they got installed, then hit up the mortgage loan officer that you're working with really promptly thereafter. Because once those cabinets go in, or they're starting that work on installing those cabinets, you're going to get an update probably pretty quick, you and your agent, and saying, hey, we're going to schedule the new home construction orientation and final walkthrough on this date, and we're expecting to close on this date. And barring anything major unforeseen, they're going to do it. So, I mean, it's all about the date of the cabinets when you get ready to close, and knowing how far you are from your close of escrow. So I think that's a really good question. And I'm super happy to have Celeste here to share her mortgage experience with you, that you definitely you want to be careful when you lock. So watch for those cabinets to go in, Micah, and then keep us updated as we move forward, please. Congratulations. I'm super excited for you, by the way. Michalu. Hey, Michalu, thank you so much for your comments the other day on the YouTube channel. And I'm super happy you were able to catch us live. She had told me the other day, hey, I hope to catch you live. So I was like, hey, 9 a.m., Monday, Wednesday, Friday, pretty much live. So happy that you're here and super stoked, my friend. Thank you for joining in. Michalu says, I have the same situation as Micah, the waiting game. So find out the cabinet date, Mitchie Lou, and it'll be your friend. Lindora Brown, thank you so much. Lindora says, very informative as always. Keep on teaching and we keep learning. Thank you and all your wonderful guests. Absolutely. I'm so inspired by the guests like Celeste that come on and share their knowledge along with the other top agents and other loan officers that have joined us. It's a blessing and it's a privilege and an honor all at the same time. So super excited to have top-notch professionals on. Sam, thank you for being here. Sam says, I close on my house next Friday. Do you think rates will go down before then?
You know, Sam, it's really hard to tell right now. You know, as I mentioned earlier, you know, with the reports coming out regarding job losses and the unemployment rate, typically we would see, you know, bonds, you know, flying up and rates coming down. But, you know, this morning when I checked the numbers, we didn't really see that happen. So, you know, with that news coming out, bonds didn't really react. Bonds stayed flat. And it seems to be that, you know, rates are pretty steady. If you haven't locked in your interest rate, I would definitely, you know, get that locked in, because interest rates are at historic lows. And, you know, if you're getting a rate in the low 3% range, it's better to just lock it in at this point.
Because, and just to provide context, Mitchell Lou and Micah, when you guys were wondering and she was talking about locking, she's talking specifically the Sam's case if he hasn't locked because he's a week away from closing. So yeah, for full context and clarity of the two different points of view for advice there. You got a new construction where there's a little bit of a waiting game, but you got Sam getting ready to close next week. So much different situation.
Yeah, it's very different with new construction versus purchases and refinances. I would say if you're in a transaction for a resale purchase or you're doing a refinance, you want to lock in your rate as soon as possible. If the rate makes sense, you want to lock it.
Mm-hmm. Good stuff. Janice, thank you for joining in again. Janice, always a pleasure, my friend. Janice says, good morning from Northern California. Closing on my, let me reread that. My closing date for my new build home in California. I'm getting ready to close. Okay.
Closing in on my closing date for a new build home in California. First time homeowner.
Sounds like I need a shot of espresso.
It's early. Yeah, congratulations, Janice. That's awesome. That's exciting. A brand new home for a first-time homeowner. It's wonderful.
That is exciting. So yeah, now I see closing in on my closing date for a new building in California. First-time homeowner, very excited and so thankful. Keep smiling and stay hopeful, everyone. You are a rock star, spreading that positivity and that mojo gojo out there. Love it. So you keep on being you, Miss Janice, and you just keep rocking it. And I hope you're smiling right now and you keep on smiling every day of your life, because let your positivity and light shine bright. Tiger, welcome back, Tiger. Tiger has another comment. So Tiger says, hey guys, we don't have a closing date on the house yet, but we talked to the builder and he said he'd be done in about 3 months. So you're looking at about August. So my wife currently is on temporary furlough until the 18th. Should I be worried?
I would say it's something you should discuss with your loan officer. If your loan officer is not aware that your wife is temporarily furloughed, you should definitely provide that information to your loan officer and just kind of monitor the situation. You have about 3 months to the closing date on your home. So if your wife is expected to return to work on May 18th, we'll just kind of have to wait and see what happens on May 18th. If she goes back to work and she's working her same normal hours, her income hasn't been reduced, her hours haven't been reduced, you should be okay. But if there's any changes with the income, you definitely want to take a deeper look with your loan officer.
That is a great point. And I something that I'm thinking through is when you talk about furlough, number one is, and my assumption would be yes here, but I don't like to assume things. I'd like to operate off of fact. So Tiger, if you're saying that you're concerned about your wife being on temporary furlough, first of all, Is she germane to the closing process itself? In other words, to your financing process? Is she on a home loan with you? Is it take her income to be able to qualify? That's number one consideration. Number two consideration is to have a very productive conversation for her and her employer about the time that she's due back. Now, she's supposed to be temporary until the 18th of this month, which, is 10 days from now. Everything's gravy at that point. But we want to make sure that there is soundness and security in that comment and that we see that happen. And the reason that comes to be is, as you know, Celeste, coming out of the hospitality industry and into mortgage loans a few years ago, a lot of your coworkers and probably a lot of your friends are affected by this right now too. You mentioned that we in Las Vegas, Nevada are going from phase 0 to phase 1 a little bit more than expected, a little bit faster, which is cool. But casinos are on the last part of that phase. And from the conversations I've been having with different people in the hospitality industry, there have been some of them that just as recently as this morning had pinged me and said, hey, Andrew, I got the update from my employer. They told me plan on not having a job for the next 6 months. And then at that point, they'll probably bring this person back. And I thought, that's awful. After I was told they'll probably be coming back at the end of the month. So the reason being is it looks like from word on the street in Vegas, at least, that the casinos and hospitality industry are going to phase in about 50% to what you were saying earlier, interestingly enough, 50% of their staff. And probably by seniority would be my guess of how that would work. And then put people out there and then slowly start adding back as the business started coming back into the fold for the casinos, conventions, and hospitality at large. So I think that's really important to take stock of when we talk about furloughs, Tiger. That's why I'm talking about that. It depends on what your wife does, what the nature of the temporary furlough is, and I would ask you to gain insight and clarity on her job security, and hopefully it works out to plan and she'll be back to work on the 18th. Now, if the 18th comes and goes, then you need to have a conversation with the builder and let them know what's up. Because if you don't, then you can find yourself in a difficult position. Think about it as, as people, we're pretty interesting this way. We do like absolutely amazing with good news. We do like pathetically awful with no news. But even with bad news, we do okay if we just know about it. And if you told the builder, hey, my wife was supposed to go back on the 18th, today's the 21st, and she's not back to work. They're telling us now she might be back to work 3 months from now, which is around the time that we're closing. I just want to bring you up to speed on this and see what we can do to work together on this. So you have more opportunity to work together if you're honest about it and upfront with it. But right now, I'd probably, if I was representing, I'd say right now we don't have any facts until we have facts, and let's wait until after the 18th to see what happens, to see if we need to have that conversation I just mentioned.
Yep, exactly. Monitor it and just make sure everyone's aware, real estate agents, builder, loan officer.
Absolutely. AJF1 says, thanks for the detailed answers, Andrew and Celeste. Thank you, AJ. Tiger said, worried about all this. I didn't tell the builder because she would be back to work before he completes the build. Would that be a problem, you think? So go back and re-listen, or if you're still obviously live with us, then we answered that one before I even saw it. So that's good. Adrian says, interesting pearl of wisdom. Thank you, Adrian. Adrian says 3.375% is so low now. We locked in a month before COVID-19 at 3.7.
I forget, Adrian, did you close on your home loan, or are you the one who's a week out from closing?
No, Sam is a week out. Okay. Micah and Michulu are buying new construction, and they have that waiting game. Adrian, I'm not exactly sure off the top of my mind what her situation is, but I know that she did mention down below that she had to run. And have a great weekend, everybody. So thank you for being here, Adrian. If you go back and watch this later on, all the same, yeah, I think it was just a comment saying that they probably closed or in the closing process, getting ready to close, and that they locked at 3.7, which was really darn good.
Yeah, I mean that's a great interest rate. I mean, anything in the threes is phenomenal. So I wouldn't look at it as you missed out on a 3.375% rate. I'd look at it as you lucked out and you got a 3.75% interest rate. I mean, that's a historically low interest rate. So yeah, I would be very, very happy with that rate.
Fantastic. Thanks so much. Very appreciate it. So Terry Says, thanks for your input, lady and gent. You're very welcome, Terry. Thank you for joining us. Nicoletta. Oh, wow. Do I love Nicoletta and her family? And here's why. Last week, Celeste, this is a true story. So a week from this, or past week from this Monday, right? So literally like less than 14 days ago, right? She reached out watching a live stream, asked for a recommendation to a top agent in Arlington, Virginia. I put her in contact with my associate over there, friend, really wonderful guy, another YouTuber, Matt Layton. Come to find out, they wanted to buy in a different location that was outside of his service area. So he introduces Nicoletta and her family to a top-notch agent in the area that she's buying in Virginia, right? And within like 3 days, when she sent me an email, it was just so amazing. Such positive mojo. They were already in contract, already had the home inspection that past weekend, and now are moving forward right now, closing on their very first home. And I'm so tickled and so excited about that. And Nicoletta, I know I haven't responded to your more recent emails, been hustling over here, but I wanted to share with you, especially since you're here right now, Nicoletta, how much that really meant to me and your graciousness. And if I find myself in that area, trust me, I'm going to give you a call, because I fully intend at some point in the future for Matt and I to be in Virginia making a collab video together. And next time he's out in Vegas, then same thing. But that said, I would be all too happy to meet up with you guys and treat you guys to dinner or lunch or something like that to meet up, because she gave me a big burst of positive mojo, and it was so exciting. And I just am so ecstatic that things worked out for her and her family the way they did. Anyways, I digress. I was just very passionate about that one because of the wonderful emails that she sent to me and her kindness. So it shows how much a positive mojo goes around can inspire positivity. Colin, thank you for being here. Colin, by the way, shared with me and what he wanted to put in parentheses yesterday in a comment, Celeste, that, oh, by the way, that was like a compliment joke. Said, hey, Matt Damon. I get called Matt Damon quite frequently, interestingly enough. So do you think I have a resemblance to Matt Damon? I mean, you know me, so.
Well, Andrew, without my glasses on, I can see the resemblance. No, I'm just kidding. No, I can see the resemblance.
I think it's
but you look better than Matt Damon. That's
okay. All right, thanks.
That's yeah, I have to be nice, or else you won't let me come back to your live stream.
You're awesome. No, I just find it interesting because it's like, you get thousands of comments on the channel, and how many of them is like Matt Damon. It's like, oh, that's pretty funny. I thought maybe Chris O'Donnell, but okay, Matt Damon.
Who do I look like? Does anyone want to chime in?
Right. So if you have a lookalike for Celeste, let us know what that lookalike is, and that'd be pretty funny. Drop that in the comments. That'd be hilarious. Anyways, yeah. Colin, let's get on point with your question, my friend. I just wanted to read your comment because I hadn't yet responded to that one, and really appreciate you and your support, and glad that my channel is helping you out. So Colin says, trying to determine if I should use all my cash for a 20% down payment or pay some PMI to maintain some cash during this uncertain time. Still have securities in case of emergency.
I would have to say it really just depends on your overall financial situation, what the payment looks like, with less than 20% down, what it looks like with 20% down. And this is where I usually like to dive in deep with my clients, and I will create charts that kind of show different scenarios and different options. And what I do for my clients is I chat about all these different options, and we kind of narrow down what makes sense. So I wouldn't say there's a one size fits all. And if you find a good loan officer, they'll make sure that you're really picking the correct loan program, you're putting the correct amount of money down, you're not depleting your emergency savings or savings for home maintenance, especially in a time like this where there is a lot of uncertainty. You do want to make sure that you have that savings, which it looks like you do have. So Colin, if you want to chat about your individual situation, I'm happy to chat with you and kind of formulate a game plan for you.
Mm-hmm. So I appreciate your insight. So Colin, I'm going to spin this around in what I think is a prudent decision-making process. Because with a 20% down payment, if that's all your cash, I would say no. I would frankly say no. And to Celeste's point is to definitely get with the loan officer and understand what the difference of payment is. The last thing I ever want to see somebody do is blow all their cash on the down payment and buyer closing costs for their new home, and then they're cash strapped. And you're right, whether it's uncertain times or whether it's economically robust times, you never want to zero your bank account, in my humble opinion. So what I was
house poor. We don't want you to be house poor. We want you to be able to go out and go on vacation and do all the things that you love.
Or simply have living expenses. And, you know, I've made several videos about how to recover from financial setbacks and how to plan for emergency funds and such. And you want to make sure that you maintain at least, ideally, 3 to 6 months of an emergency fund. An emergency fund constitutes not all, you know, entertainment, how much you spend on that, but how much it costs to live, your shelter, your food, your water, how much it costs you to live is your emergency fund comfortably, right? And I would suggest to you, since you have done such a brilliant job saving up that much money, if that is all the money you have, factor out how much money at a minimum, a 3-month emergency fund is, and then get with your loan officer and say, hey, as opposed to doing maybe 20% down, what do you think? And what would my payment look like at a 10% or a 15% down? And the reason that is this, Colin, you know, historically, American real estate appreciates year over year. Now, the projections coming in for this next year from like Zillow, Realtor, Lawrence Unit, National Association of Realtors, economists, they're projecting that we could see a decline in property value, but it's not substantial, frankly. And you're going to hear this one probably next from fear porn and everything else. But the reality is this. We're probably looking at somewhere between a 2 to 5% drop off of today's home prices, right? That's not a bad thing at all. And the reason being is that in real estate terms, when we talk about 2 to 5%, it's nothing. Consider the fact that whenever we were in 2019, we saw the house appreciation rate upwards of 4% just for that year. And that was down from the previous year. That was like 11%. So when you start putting it in context, if you get into a home, you say that you lose 2 to 5% of your value, it's not a big deal. You're going to probably recover it within 12 to 18 months and then go upwards and beyond that. And meanwhile, we still have to have shelter, food, and water. And the other important consideration there is either you can choose to own your roof or you can choose to rent your roof. One of these, you will see your money again, ideally in the form of home equity. One of these, you'll never see your money again, called renting, right? And the reason I bring this up is to get to the main point about the significance of a 20% down payment and dropping the PMI. Let's say that you and your loan officer work it out, Colin, and it makes sense that you can do a 15% down payment. Well, once you reach a 20% loan to value ratio, or 80%, loan to value ratio in your property, right? Then you will be able to drop your PMI on your home loan.
It depends on the loan program.
So if it's different, a conventional loan,
conventional, it'll come off automatically when your loan to value reaches 78%. So if you've put 15% down, you know, what I would do is I would look at your amortization schedule and kind of time out how many payments you'll have to make to get to that 78% loan to value. Now, if your home appreciates in value dramatically, you can always call your servicer and ask that they do an appraisal, and they'll have a specific requirement for where your LTV needs to be. Some servicers I've seen require 70%, some 75%, somewhere around that range, and then they will drop off that private mortgage insurance. Now, with an FHA loan, if you put less than 10% down, that mortgage insurance is on for the life of the loan. If you put more than 10% down, it typically falls off around 11 to 12 years. So after 11 to 12 years of owning your home, then that mortgage insurance will fall off. So these are all things you can discuss with your loan officer, and that's why it's important to discuss what loan program you're going to be in, how much money you're going to put down, when the mortgage insurance is going to fall off. So there's a lot of different factors.
There are a lot of different factors, and the reason I thought conventional is one, PMI, the word PMI as opposed to MIP for mortgage insurance premium for FHA. So Colin, at the end of the day, you have a lot of different options. There's a lot of ways to skin this cat. And though you could rely on the service provider to do an automatic drop of your PMI, your private mortgage insurance, if you are doing a conventional, you can also be proactive and simply call them whenever you believe that you've hit that 20% stake. And there will be an option there too. But to Celeste's point, Validate and verify with your loan officer what is the specific mortgage service provider's requirement to drop the private mortgage insurance. Ultimately, Colin, the moral of the story here is at the end of the day, don't tap yourself out with all of your money in the bank. Make sure that you have an emergency fund ready to go and make the most well-informed decision that's right for you based upon the situation that you're in for the reasons that are important to you. I think it's a brilliant question. I think that was something that, I haven't been asked that direct question before. So Colin, I appreciate you for that. And I really hope that not only does it help you, but anyone else watching either right now or after the live stream. So thank you for that question. Tiger says, my wife's job is secure. She is a mammographer. I remember I'm a country boy, so some of this stuff, words get to me.
Mammographer. Wow.
Yeah.
That's a tongue twister.
It is, right? Her employer said she will have a job there 100%. They just can't pay her to sit home. That makes sense. So it sounds like that if they're in her position, if she's being told she's returning on the 18th and obviously dealing with the medical field there, then that's going to be really good. So it should be pretty good. Yeah. And so I would just, going back to what we discussed earlier, Tiger, hold your position until 2021. And if she's back to work on the 18th as planned, perfect. Mm-hmm. No harm, no foul at that point. Wally Gator, now this will be a fun one, Celeste. Wally Gator said, I commented on your live show a couple of weeks ago about VOE no loan docs. Are those type of loans still available? If yes, what's the down payment, credit requirements, and can you still get a good rate?
No doc loans. So
specifically
I'm trying
VOE.
So for a no doc loan, I'm kind of confused. Are you talking about a bank statement loan? Are you talking about non-QM loan?
So if you could provide us with some more context, it's the same question that I had whenever it came up, and whenever he hit us up, it was on a Friday. I didn't have a loan officer with me, but Wally, now that we do with Celeste, and Bill will be back on Monday. Same thing.
I think he's probably referring to what's called as a non-QM loan. A lot of these products have dried up. I don't know very many companies that are still offering these products at this time. So, I definitely get with your loan officer and kind of figure out, is it possible for you to get into, an FHA product, a VA product, or a conventional product for the time being. But, as we start to see things go back to normal, I definitely think we'll start to see more of these products that we love come back, like non-QM loans specifically. So that would be like unwarrantable condo purchases. Sometimes, bank statement loans fall into this category, foreign investor loans, ITIN loans as well.
Thank you for that. And if you give us some more insight into the specific application that you're going for, Wally, my guess is that could better guide you. But at the end of the day, if you have not yet completed a mortgage application, the first step would realistically be to do that. And if you're here local or just want to talk to Celeste, you can hit her up directly to do an application, and she can help review your situation for you and put you in touch with a loan officer if you're out of area to help out with. So just a thought there of what she can do.
My cell number is on there, so you can text me. I love to text message, or you can just give me a call.
Of course you do. You're the youngest of the young for millennial crowds. I mean, you're almost a Gen Zer. You're so young, right? So I know you. I know. You're gonna tell me I'm not so young anymore, Andrew. But yeah, you're pretty young. So.
I'll take it. If you think I'm Gen Z, definitely not going to object to that at all.
Fantastic. So Wally says, also, thank you very much for all the great updates on your video. Thank you, Wally, for joining in on the videos that you've watched. And thank you again for the question. I have a massive hankering to get 100% answer to your question, but it is beyond my scope or field. So please let me know about that. And I do see our buddy Bill, who will be back Monday at 9 a.m. says #CTP.
Bill, what's up?
Right. And Bill and everybody out there, hey, that's what Bill and I like to call Celeste, is #CTB, as in Celeste the best. So that's what we've always called her, is #CTB. She's awesome people, good mojo.
Yep.
So Willie McIntosh says, hello, all from Italy, U.S. Army, currently in underwriting. Just received yesterday a follow-up loan estimate. Can you explain what that might be? I haven't talked to the lender yet, given the time zone differences.
Let me read this one more time. Hello, all from Italy, U.S. Army, currently in underwriting. Just received yesterday follow-up loan estimate. I think what you might be seeing is a revised loan estimate. So at the beginning of your transaction, your loan officer had to issue a loan estimate to get the process started. And this is just an initial document that kind of states, what your loan amount will be, if your interest rate is locked, if it's not locked, what your payment's going to look like, what all the fees are projected to look like. So if there's any changes with any of that, maybe you guys changed, some form of the loan amount, maybe appraisal came in and you had to change the loan amount, or maybe your interest rate was locked in. There can be a variety of factors of why the loan officer would need to redisclose or disclose a revised loan estimate. So I would definitely get with your loan officer to discuss if there was any changes made and to discuss why they're sending out a revised loan estimate.
Right. And since you haven't talked to them, given the time differences, Willie, what you could always do too is hit them up directly with like an email, or try to schedule like a Zoom call, something that's internet based. It would probably be pretty cool to do that with your loan officer. I know that Celeste and Bill Marin do that here in Henderson and Las Vegas, where they'll schedule Zoom calls around the clock to help people out I say around the clock, but I'm pretty certain that she's not up at 1 a.m. But all this.
Well,
but then working out.
You needed me to be, if we scheduled it, can make that happen.
Yeah, sounds about right. Whatever is needed, as long as we schedule it out. And definitely being active duty Army, thank you for your service, number one. And number two, yes, I'm a former Marine. Bill's former Army. Celeste just loves military, coming out of military town, USA, called San Diego. Strong appreciation. So yes, we will definitely hook up everything we can for active duty and veterans to make things happen. So that's a good point. But Willie, definitely get up with your loan officer, please. Colin says, thank you, Colin. Very much appreciated, good sir. Nicoletta says, hey, Celeste and Andrew, we decided to put down 19.99% for a lower rate of 2.8. Ooh, God, how'd you get that kind of a rate? I want a 287. Celeste, Bill, can I get a 287? No, I'm just kidding.
That's a smoking rate. Congratulations.
No kidding. 287% conventional rate. Was told that after one payment, the PMI should drop. Any advice if my lender sells our note before this?
So I would definitely look at your amortization schedule, and like Andrew and I have been saying, once your loan to value reaches 80%, give your servicer a call and see if it can be removed. Otherwise, you should expect your PMI to fall off after 78% loan to value. And, kind of how you get that loan to value number is you just take the loan balance and you divide it by the actual value of the property from your appraisal. And that's how you're going to get that percentage for the loan to value.
Good stuff. So Nicoletta, it sounds like you're you already know the math, and I definitely appreciate Celeste sharing that with everybody that wasn't aware of it before. But Nicoletta, what I'm going to ask you to do is get more proactive. Contact your loan officer and say, hey, number one, who's going to be my mortgage service provider? Is it going to be you, or are you going to be selling my note? Number two, if you're selling my note, how can I guarantee that we will drop this PMI after we make our first mortgage payment, as we have discussed? And number three, what happens if it does go to that? And Celeste is giving a couple of different numbers today, depending on the service provider. Say who is more, if your note is being sold, Nicoletta. So that's the if, okay? If your note is being sold, who is more than likely to be your service provider, and what is their policy as far as dropping your PMI? That way you have all the answers to your question. So I know I rattled off a lot of harder hitting questions, but it really needs to take it back to the loan officer. And I know that you shared with me that you're working with a loan officer you're very happy with and comfortable with. So I'm sure that if you ask them those questions about, are they servicing the note? Are they selling the note? I'm sure they're going to be more than happy to get your questions answered, so we can make sure that you're able to drop that PMI as quickly as possible after your first payment in this case. So I think that's really good. So ask them specifically about who's going to be servicing the note. Because my note, you know, I did my home loan in 2016 for the house that I have now, Celeste, with Bill. And his company services my note. It's not getting sold, so I don't have to worry about it. So I know that if I had an internal servicer like New American Funding is, then I know that I'm just going to be over here paying my service provider. And if I had a question, obviously knowing Bill and you as I do, I just would ask the same questions I asked Nicoletta to ask of hers. But it's a very good question. And please keep us updated on what you learned there, Nicoletta. I think that's a great thing for us to keep tabs on. Bill's given some more positive mojo on Facebook now at hashtag pound us, right?
Yeah, pound it.
And then Tiger says, my house is not a short sale, obviously, but from past experience, those can be very frustrating. Can you explain to others why they are so bad and how long it can take? So Tiger, that would take us into at least about a 15 to 20 minute rant, or at least education segment on that. I have made a lot of videos about short sales, so let me just sum it up in the most basic of ways to try to keep it simple, right? So a short sale, what is a short sale? Number one, somebody owes more on their mortgage than is the realistic fair market value for a home. So let's say that somebody owes bought a $500,000 home, have a $500,000 home loan on it, and the home is worth, let's say, $400,000. So by virtue of going through a short sale, you're essentially asking the bank to go short of what is owed on the loan down to the $400,000 amount and leave them on the stick for $100K. All of this process takes a lot of time, from the application process to working with the bank at the speed of a bank. Banks are really fast to make money, but they're very slow to let it go. Just being real, right? So that's just being real. Very slow to So there's a big process that has to be gone through. And when you talk about the overall timing, to keep this answer simple, you can be looking at anywhere generally between 6 and 12 months in a lot of cases for a short sale. Really just depends on how rapid that bank can move through the short sale process, how long it takes to get what's called a short sale approval letter. If a property that is a short sale already has what's called a short sale approval letter, then that short sale approval letter is generally good for approximately 30 days. If a buyer comes in and purchases it while that short sale approval letter is in effect, you can close in 30 days. But from start to finish on a short sale, you're normally looking at 6 to 12 months. And it can be very frustrating. And depending on market conditions, what makes the market tick, TIC, trends, indicators, and conditions, essentially, what you could expect to see happen is if the market's going up in value, you can see you can actually see the bank after 6 months going in, have an appraisal done, say the home is worth more money, and now they're going to give you 48 hours to comply or get off. Meaning that either you go to the new price that the bank has dictated for that property, or you pound sand, and they don't care, because now they got a short sale approval letter, they'll go back on the market. That's just real. I've seen that happen again and again and again as the market's appreciated here in Vegas. Now, it is also important to take in context, Tiger, that distressed property sales coming into January of this year accounted for approximately about 1.15% across these United States, one of the lowest ever distressed property sales. Distressed property sales constitute auction properties, foreclosures, and short sales. If we just had the most incredible blow up of foreclosures, short sales, auction properties, and stuff in the real estate that we've ever seen, courtesy of COVID, and it blew up 500%, that means our market would have 5% distressed property sales. And I know from the people that I've been talking to that were around as agents and brokers back in 2008, and everything that I've been reading and talking to with other agents across the country, probably not going to happen. That's just being real and keeping it honest there. All the same, there's always going to be short sales and there's always going to be foreclosures. It's just a matter of how much of a percentage of market share is it for the overall market. That dictates how healthy a specific real estate market is. And if we're under 5% on average, we got no problems. It just sucks that 5% are distressed property for the people that are enduring those circumstances. But last time I checked, 95% is a straight up A. So Hugo G says, hi, could you please tell me the current refinance interest rate? I have a current 30-year fixed mortgage rate of 4%. Should I refinance?
Well, it really just depends on what loan program you're going with. Are you looking at a VA loan, an FHA loan, a conventional loan? But regardless, if you're at a 4% interest rate right now, I would definitely look at completing a loan application and seeing if you can reduce that interest rate. It's like I was saying earlier, for those with pretty decent credit, we're seeing, interest rates in the low 3% for most mortgage companies.
Good stuff. Thank you for that. Willie says, yes, sir. Looking forward to closing on 21 May. Congratulations, my friend. Super excited for you. And again, thank you for your service. And he said via Zoom. Yes, definitely hook up the Zooms. Those are awesome. It's the next best thing to actually meeting in person, in my opinion. He says, thank you all. Colin M was asking Nicoletta a question and saying, hey, is that 287% for a 15 or 30-year mortgage? And Nicoletta had responded, Colin, it is for a 30-year mortgage. Thank you for that. Bill wanted to chime in something real quick here and said, great answer, Celeste. And regarding PMI falling off, you'll want to make sure that the PMI company and lender will allow it to fall off after one payment. So this is for you, Nicoletta. So fortunately, Bill and Celeste now, hey, you know what? Poof, two powerful loan officers. Love it. So get up with the lender, verify the PMI company and the lender will allow it to fall off after only one payment. And once you do that, Nicoletta, and you'll know exactly what the scoop's going to be there. So really, really cool. Calling in says, wow, Nicoletta, that's awesome. So we've been streaming live for about 75 minutes. I want to thank everybody that has stuck it in there with us for this long. And if you're watching us after the fact on recording, thank you for being here and thank you for being part of the stream. Looking forward to seeing you guys again in the future. Now, at the end of the day, Miss Celeste, do you have anything else that you would like to share with us before we adjourn?
That's about it. The only thing I can really share right now is that it's important that you continue to educate yourselves, that you remain positive throughout the pandemic, and just realize that at some point things are going to start to look a little bit normal. It just depends on how long it takes for us to get there. But with, temporary job loss at 18.1 million people, I think we should see a lot of those people get back to work and return to normal a lot sooner than we think. So if you guys are interested in purchasing a home or refinancing a home, or you have any questions about the mortgage market, feel free to reach out to me. My phone number is on my website. It's 702-715-9061. Shoot me a quick text, give me a call, and I'm happy to help.
Fantastic. Well, Celeste, you're always welcome back, my friend. And maybe we'll make you a mainstay to Friday. So we got Bill on maybe a Monday and a Wednesday, and we have you on like every Friday. That'd be fun. So we'll have to talk about that. But all the same, everybody, again, thank you so much for being here. We're coming up on the weekend, so just keep in mind, keep your positivity up, keep your positive mojo out there, and please be the reason someone smiles today. Smiles are infectious and contagious, and we can make the world a brighter place, one smile at a time. Thank you again, everyone. Enjoy a beautiful weekend, and we'll see you Monday at 9 a.m.
Bye, guys.